Welcome to the Stockout show of the year. This is the show at FreightWaves. We talk about the CPG and retail industries. I'm Mike Baudendistel, joined by Grace. Grace, excited for this rundown of what has happened in 2023, which gives us some ideas also what's going to happen next year. I think a lot of these trends are ongoing. So looking forward to your description, of the retail space here. So we're going to do that. Also give one quick news item, and then we're going to interview Frank Hurst, Executive Vice President of LTL at Echo Global Logistics. Before we do that, if anyone has not already signed up for the Stockout newsletter and would like to be, this is one of many newsletters you can sign up to at www.freightwaves.com/subscribe. And it's going to be up, or you can just go to freightwaves.com up the top under newsletters. It's going to be the first one under supply chain. Try to get one of these out every week with a lot of the topics that we cover on the Stockout. So with that, I want to just go through one news item, which is Costco shares is just really soaring. Even better than the stock market. You look at the Costco results on Friday. Their stock was up 4.5%. The market cap's up to almost $300 billion at this point. So it's the third largest retailer, and total return last year, 47%. And just look at the PE ratio, 42 times next year's earnings. So this has been a tremendous story here, and they seem to have a lot of room for expansion in some of these international markets. It's kind of interesting that they have this constraint of finding the locations for some of these facilities because they're so big. And actually looked at some of the pictures that they have on their site of some of these international locations in Asia, and they do all the parking on the roof of a Costco, of those Costco locations. So they do things a little bit differently internationally. But some of the highlights from Costco's results on Friday, same-store sales up 2%. So that's nothing too surprising. I guess traffic in terms of the number of visits up 4%. They said paid memberships up 7% from the last year. And then some interesting comments on inflation, which I think are relevant for the entire CPG space. They said inflation, they're seeing from their suppliers 0 to 1% year over year. So that's come down a lot. And then they said that, someone asked them, one of the analysts asked them, were there any areas where the inflation is stubborn? And they called out CPG specifically. We've heard similar things from other retailers. And they did say that they're working with those CPG companies. It sounds like some of that inflation in the CPG is going to come lower, similar to what we heard from Walmart the last time they reported. They did say they're seeing less inflation on the Kirkland brands for those suppliers that go into the private label. So really lower inflation all around, and no real suggestion that there's retrenchment by the part of consumer, at least not in Costco's results. But always impressed by that company. So with that is one news. Are you a Costco fan?
You know what? I'm not, but I'm considering it. We also got just recently near us, I think like BJ's or something like that. That's kind of like it. I will say the one thing I wanted to kind of pull, if we want to call it the retail side of things, in that call was just even their comments on the e-commerce side of Costco, which I've never really considered in the past. I know it's a place that a lot of my friends love to go to. They've got good food, great experience, clearly great pricing, and they're holding, if not growing, that audience as well. But they also spent a good chunk of time discussing the e-commerce side of Costco, which I thought was kind of interesting, even down to I think they talked about how many was it? A number of gold bars that they're now selling online, and a different really oddball things like Mickey Mantle autographed 1951 rookie card. So it's like I guess I get excited on the retail side of what we might see from Costco in 2024 if they continue to expand even their e-commerce purchasing too. Because for me, I've always felt Costco's like more of an experience while shopping compared to the e-commerce side of things. So we'll see how that develops next year as well.
Yeah, I mean, it's another opportunity if they get a big into e-commerce. So it's almost like the big growth areas are continuing to expand subscriber count, but then all this international opportunity, and then the e-commerce where they're behind. So all seems to be playing into their hands. With that, I want to move on to our highlights from 2023. Just talk through a few of the trends, And so I'll go first. I'll talk a little bit about the CPG trends. And so I think the big thing this year was sort of the inflation dynamics with CPG. Really throughout the year, you saw commodities come down. A lot of commodities that are inputs for the CPG companies, and then there was this big sort of push and pull where the CPG companies were really reluctant to reduce their prices, even as you saw fresh food prices come down, which a lot of those are more of a pass through from the commodities onto the consumer. And the CPGs would say, well, just because my commodities are down doesn't mean my overall costs are down. My labor costs are still higher. My packaging is still higher. My manufacturing costs are still higher. So all these other things. Plus, they have margins that are below pre-pandemic levels for the most part. And early in the stages of inflation, they give up a lot of margin because they're just kind of playing catch up. It takes time for the retail prices don't adjust as quickly as their costs do. So they're hoping to recover some of that margin. But now I think we're really sort of in the late stages of that. Like those comments earlier about Costco's cost inflation, I think we're towards the end of that. Another trend I picked up on this year, I do think that elasticities in CPG sort of normalized, whereas the past couple of years, 2021, 2022, you saw a lot of inflation in those prices, those retail prices, but there really wasn't much impact to volume. Started to see that more this year, where overall elasticity, creeping up. So now it's something like, like a 0.3. So for every let's say dollar, or for every, so 30%, reduction in volume, for every, price increase. And then the supply chain resilience, I think, has improved for the CPG companies. I think they have more, built in terms of even just inventory. The on stock rates are very high. And I think they sort of have to be, because there's all this pressure from retailers to get the perfect e-commerce order. Walmart talks about having the perfect order where there's no substitutions. It's exactly what the customer ordered. And then, Amazon, you really have to sort of play their game if you're going to have, sell goods on the Amazon marketplace and have them qualify for Prime. That's something we talked a lot about on previous episodes. And then I thought there was interesting dynamic with the stock price performance. The retailers, for the most part, had a better year in the stock market than the CPG companies did. And the CPGs, had been outperforming the industry last year because they're viewed as defensive stocks. And this year, the investor appetite for risk increased, particularly late in the year. We've had this tremendous surge in the stock prices. And then there's been this bear thesis on Ozempic that it's going to curb people's cravings, which will really hurt the CPG industry. You see a lot of investors react negatively to the Smucker's acquisition of Hostess, and so some bear thesis tended to creep in. Some thought, well, maybe those CPG companies wouldn't be able to recover the margins versus the pre-pandemic levels, because as soon as commodities start coming down, the retailers just won't accept any more price increases. So it's been a little bit of a mixed year, I would say, for the CPG companies. What did you see in the retail side of things?
Well, one big area that you actually kind of just touched on was just the frictionless aspect of purchasing something, and the overall from the point of sale to the delivery as well. I mean, I think we've seen this last year in particular, and really, I think fueled mostly by the pandemic. I don't think we have seen this as fast as we have, where you can see something, see an ad online, click that, your size is in stock, you're ready to go, you click that. Now all of a sudden, if it's through Amazon, we all know that they even have the capability of just with one click purchasing and having that come straight to your doorstep. But yeah, the ability to purchase something, know when it's going to deliver, know that it's in stock, and no questions about that. And I think that takes a lot of investment. Not only you touched on as well how you're warehousing your products, some of the demands that Amazon and some of these third-party sellers are asking for to make sure those products are in store. I think the best way to look at the failure of that frictionless activity is looking at Bed Bath & Beyond. That was their biggest issue, is they had a beautiful third-party e-commerce market that you could see online, but none of it was ever in stock or available for everyone. And then the opposite, if you were to go to the stores, a lot of what was on the shelves wasn't what people were interested in purchasing. So I think a lot of retailers look back at what happened with Bed Bath and Beyond and question, how they are selling their products, that and including in that sale the exact supply chain of those products as well. And I think out of that, and what I'm really excited to see for this next year is kind of the technology that helps improve that. There's a lot of really interesting investment in not just advertising, but the geography of those who are looking at certain ads and being able to reroute your inventory to certain areas of, let's just say, small domestically the United States. If a certain area is looking at, let's say, bathing suits or something, being able to make sure that those are located in a spot that if someone was to click, yes, I want to purchase this item, it can be there in a day or two, or even in some cases under 2 hours, or in the store by the next day. I think we're going to see, of course, more retailers focus on what Target's been huge with, which is being able to kind of leverage even some of their stores as warehouses. Now, in some cases, if that's not done appropriately, that can hurt you. But it's also worked out. And I think especially in times like right now, when you're getting ready for holiday shopping, that can actually help a little bit more than it hurts. Excited to see clearly how that holiday shopping looks like, and how much of that investment in the supply chain has paid off, which we'll find out here right in a month or so as we start to see some of the earnings from this past quarter and this past year too. So I think a lot of that, if I had to give like one word to sum up the big points of this past year for retail, it is that frictionless experience. And I think that's what's driving even more of the baby boomers towards online shopping, is knowing they don't have to spend hours going throughout a store to purchase something when they can just look it up online and see even if it is in the store, if that's the experience they want. It's interesting to see, I think, how we are meshing the advertisement technology that many are investing in, taking that and then putting that into the supply chain intuition or process, right? And then making sure that we're leveraging some of these more regional warehouses over time to make sure that that stuff is ready to get delivered. I mean, like I said, I think competitive wise, there's items that will lose against others, even if quality is better, because it can deliver in less than 2 hours, or even the very worst case, delivered by the next day. So I I think there's a lot of backlash that can come from that when we talk about maybe emissions and things of that nature. I don't know if you've seen recently, like if you're purchasing right now Amazon stuff for Christmas, right? They kind of incentivize you to they'll give you like $3 digital coupons if you can wait a day or two to make sure that things deliver kind of together and they're not wasting emissions or wasting space on their vehicles, which is great. So I think we'll see more of that into the next year too. But again, I think we've learned over this past year that the selling point is your supply chain, and if you can't prove or keep up with the competition, then you're really gonna suffer those sales as well. So those warehouse management companies, those on-demand warehousing technologies, and then things of that nature. We've had a couple of guests on here that kind of help with that, and I think we're going to see more of that into this next year, especially as they can retailers start to control their inventory too.
Yeah, lots on inventory management this year, lots on warehousing, lots on convenience. All of those things. It's just all huge trends. With that, I want to bring in today's guest. It's going to be Frank Hurst, Executive Vice President of LTL, Echo Global Logistics. Do we have Frank?
Hey, can you hear me?
Yes.
Perfect. Yeah.
Oh, perfect. Good. You're speaking my language, talking about CPG and warehousing and technology. So I'm just glad to be on.
Yeah, absolutely.
Well,
I want to get your thoughts on those things.
Go for it.
Yeah, let's
so really, I think I'm going to talk at the same time there, but I just want maybe just to start. I mean, one of the things that CPG companies are struggling with a little bit is, one of the complicated things that complicates the whole process is the perishability of certain items. You want to have something by this certain sell date by date, and it's not just like food items, it's things like pharmaceuticals and those things. So how do you recommend that CPG companies go about managing that?
Can you hear me okay, Mike?
Mm-hmm. Yep.
Okay, good. Yeah. So, thanks for having me. Well, at Roadtex, that's what we specialize in. Within Echo, we purchased Roadtex about a year and a half ago, which is a temperature-controlled LTL and warehousing group throughout the United States, and we specialize in the most challenging of deliveries, being into mass merchants and big box retail, and specialize in that temperature range of about 45 to 60 degrees. So, all temperature control for products that cannot freeze, but then also cannot melt. So as we work with a lot of those clients, we understand that it can be somewhat daunting delivering into mass merchants and big box retail because of the requirements they have around appointments, RAD dates, must arrive by dates, the level of quality, food safety, and so forth. So we spend a lot of time working with them to ensure that we're managing their not only the inventory in our warehouses, but also providing the transportation to meet those on time and full requirements that they have into the mass merchants.
Mm-hmm. Mm-hmm.
That's when you say you're focused on that between freezing and melting point. That's the anxiety inside of me lifts a little just considering the movement of that shipment in particular. You named a couple of areas that you focus on when providing that solution, right, at Roadtex. What are maybe the most challenging for you now in the space today?
Yeah, sure. I think we do operate temperature controlled warehouses. We have 32 facilities across the country, so all heat and air to make sure that's just the right temperature. Then we run a complete reefer fleet as well at all times. So at no point does product challenge from being too hot and melting, especially when you think about confectionaries, chocolates, nutraceuticals in the summer, and the same thing in the winter for products, whether it be pharma or it could be chocolate that couldn't freeze as well. So I think some of probably the most challenging is just in the extreme cold conditions like we have right now. Sometimes, and I'm in Chicago today, especially from now till February, and then you think of South Texas and South Florida in the summertime. That's where we're really, from a quality standpoint, it's important that we're making sure the product and the temperature is proper. At the same time, making those on-time requirements for into mass merchants and big box retail, because as you know, they're the distribution arm for CPG throughout the U.S.
Yeah, I wanted to ask you just, in the context of where the freight market is, all these issues. I mean, you've had a loose freight market really since the beginning of 2022, and maybe some signs of life there. I mean, if you're a shipper, let's say you do reefer. I mean, reefer is kind of its own niche. How would you be positioning yourself over the next year?
Well, I think without a doubt, we're not immune to the reduction in demand, right? That's in the market today, whether it be on the LTL truckload side. I do think that when you think of reefer LTL, temperature controlled, especially into mass merchants, one of the big differentiators is that for shippers to look at their total cost of transportation, not just the move itself, but to include what is their inventory levels to make sure that they're expediting the time from their shipping dock to the shelves for the consumers, making sure their management of RAD dates and must arrive by dates, but also when you're shipping into mass merchants and big box retails, fines and chargebacks are a really big piece of the total transportation spend. So that's one of the things that we always talk about, is how do we factor in the total cost of transportation to make sure you're aligning the right carrier with the needs you have, because there's a lot of times more than just the point A to point B types deliveries that come into managing spend overall.
Yeah, it's I think it's a lot more focused on not just what the upfront rate is, right, but everything that's going into the practice of moving that shipment, especially what you're doing at Roadtex. It's going to be even more shippers will be even more cautious of how that their capacity networks are treating their freight as well. I'm interested in that aspect too. The capacity networks, as we're seeing, of course, capacity start to fall out in various segments of transportation. How is Echo managing through that? And sounds like you have some assets, right? To, of course, to push through that. But how are you building your networks to make sure that you can sustain the needs of the customers as well?
Yeah, it's a great question, especially at Echo with over 50,000 carrier partners that we utilize today. We have a tech-enabled platform at Echo, and really our job is to work on behalf of our shippers to make sure that they're using the right mode of transportation, the right carrier as well to fit their needs. At the same time, spending just as much time with our carrier base to understand what are the needs they have in their network, how much capacity do they have. And so we spend so much time on both ends of that because really it's about making sure that we're coaching and working with our customers to make the right decisions for their business, factoring cost, service, so forth. And even in a period like now where there's a little more capacity in the market than there was a year and a half, 2 years ago, is to ensure that we're putting the right position, the right freight for our carriers in their networks where it makes sense for them overall. And same thing when capacity gets tight is to make sure that we're working with our carrier partners that, Echo is the broker and 3PL of choice. So we have all the capacity for our shippers at the same time and all the technology and reporting for our shippers.
Yeah, we're talking, largely about sort of high service reefer, shipments, pretty service sensitive, time sensitive. How does that work across modes? I mean, Echo's always done a lot in, LTL has a huge carrier network of truckload as well as there's some intermodal. Is there an opportunity with these reefer shipments to consolidate LTL into truckload? Or one of your colleagues was on one of our shows talking about partial truckload, or are you a believer even in refrigerated intermodal, or is there too many sort of moving parts there?
Well, it's a great point. When Echo purchased Roadtex a year and a half ago, it was a great complement to the temperature-controlled reefer consolidation business we already have at Echo, which is that chilled type range. And so we've been doing consolidation reefer for a long time and for a lot of our customers. And then you think of the chilled solution we have, and then within Roadtex being temperature-controlled with that 45 to 60 degree with warehousing capabilities across the U.S. But for us, what we look at is it's a great piece of business, and we do all the time. We're always working for consolidation with customers, whether it be dock drop distribution, where they run reefers into one of the 32 facilities we have, and we handle the final mile delivery. Same time, we do a lot of origin consolidation as well, where we work with our shippers on the RAD must arrive by dates, working with buyers to ensure those shipments are dropping in the right time. We can consolidate and run truckloads into the mass merchants, big box retailers. But again, it all comes back to, I think, what Grace said a minute ago is right on time service. When you're delivering into big box and mass merchants, service failures are not an option. You got to be on time, and we do deliver live by PO on a daily basis, and many times it's 24/7. Especially in this time of the year, as our customers are trying to get their product in the shelves prior to Christmas or prior to delivery, we're working around the clock to make sure that that product is in the shelves and in the DCs for our customers.
Love that. Santa wants cold milk, right? Not spoiled
Right.
milk. We'll make sure it gets there perfect for him. As we wrap this up, we're ending this year in 24, right? Or going into 24 from 23. What are you looking most forward to leading the charge over there at Roadtex, and what do you see from the market going into next year too?
Yeah, we're excited. I think it's especially where we've been kind of moving to an area where there's a little more calmness. I think overall, we're talking to a lot of shippers right now who are looking at their budgets in 24. Kind of back to what I mentioned earlier, not around the fines and the chargebacks that they may be receiving, but also just around food safety and spoilage and making sure that their product is being in the shelves fast enough. So work with a lot of customers in that. We feel really good about how we're positioned in the market from an on-time service perspective. And at the same time, you mentioned it, having a full suite of solutions within Echo. Right, you think about the customer that ships into big box. That's helping them manage the intermodal. Could be into one of our warehouses. We do the display building, we do with the inventory management, the warehousing, at the same time the final mile delivery within Roadtex to the mass merchants. So we're seeing a lot of customers as they're saying, we really want to focus on how do we grow our business in 24, maybe take share and meet some of the challenging demands they have in their plan, and make sure that they partner with a provider like Echo, who can have a full suite of services from, all the way from the port all the way to final delivery within mass merchant. So we're excited about that, and I can't leave the call without taking the time to recognize all the carrier partners that we have, and also drivers at Roadtex. Because right now, as we're in the holiday season, and some of us are enjoying happy hours with friends and so forth, it's important to realize how many drivers are out there, really drivers, dispatchers, folks in the office that are working 24/7 around the clock to make sure that those of us, some like me, who are procrastinating in their orders and for Christmas, that our drivers are out there making sure that the deliveries are made and safe every day. So at Echo, we just want to thank all the carrier partners and drivers we have, and really recognize them during the holiday season.
Love that.
Yeah, it's great. Nice of you to do that. Always, I don't think it's said enough. But it was great having you, Frank. How can people reach out to you and learn more about Echo and Roadtex?
Sure. You can look me up at LinkedIn. I'm on Frank Hurst at LinkedIn, or you can go to www.roadtex.com or echo.com as well. And you can get within Echo or Roadtex. You can send me an email at frank.hurst@echo.com, and I'll respond to all of them. So really appreciate you having me on, and happy holidays. And here's the best to a great 24.
Great. Happy holidays to you too, and all the Stockout listeners out there.
Thank you.